Hello, everybody. Hello, Ritesh.
Hi, Ritesh.
Hey Matt.
Hi,
Hey Julia,
Matthew.
how are you?
Hello, everybody. So excited to have this webinar together. Um, Ritesh, thank you so much for organizing this panel and being so generous. To everyone in here, Ritesh is not only a good friend, he's an active EB-5 investor right now who's gone through the process. And we all had a vision, right, to be able to support the EB-5 community on how to be able to empower people to make the right legal and investment decisions and think critically on their own. And Yulia and I had the great fortune of working very closely with Ritesh to offer different perspectives. So, Ritesh, we are starting this webinar. If you can kindly introduce yourself, and we can talk about how the flow of this workshop's gonna work. For everyone in the room, this is an EB-5 open forum, so we really encourage you to put questions on the Q&A, and they'll be asked. So, I am seeing a lot of questions pending right now. So if anyone has questions, I definitely encourage everyone to put it in the chat. But Ritesh, could you kindly introduce yourself and tell us a little bit about kind of where you are in the EB-5 process?
Hey, thanks Matt. Thanks for having me here. Should we, before I start, should we give a minute or so for everybody else to join, or should we get started? I think I see
Yeah,
people just seeping in.
a lot of people are rolling in, so happy to wait a minute or two, but
Let's give half a minute so everybody is in.
okay, great.
It takes a little while to click on the link, put in the meeting invite, and then
We don't
Yeah,
want
join and
anybody to
have the
miss any
headset.
information.
Yeah.
yeah, seeing a lot of great people join. Welcome everybody to the EB-5 Open Forum.
Yes, please post any questions. We'll be happy to answer any of the questions that all of you may have.
Do they
Yes,
have access to chat? Can they?
they yes, they do.
Okay.
Chat feature is open, so there's a Q&A, right? I think for chat, there may be a direct function, but for Q&A, please post your questions. This is supposed to be a very open forum, so if anyone wants to know anything about EB-5, post it. It'll be asked. I am seeing a lot of questions being queued up, so we'll do our best to try to get to everyone. And if you're inspired to ask any questions throughout the process, we'll add that to the queue if there's time.
Also, I
Awesome.
think one more note that if the question is very, very case specific, don't provide your personal information in the chat.
Yeah, so if that's a great point. So if anyone has a very specific project related questions, try to frame it so it's universal for everyone. Yulia and I are happy to answer those individual questions later if it's something very personal. But I think that's it. We've got a good crowd in. Um,
Okay.
Ritesh, if you want to kick it off.
Yeah, like Matthew just mentioned, my name is Ritesh. I'm an active EB-5 investor who just went through the whole process of doing a due diligence, going through source of funds, deciding on the project and everything. And I finally made a decision, and thanks to Matt and Yulia for guiding me to make that decision. Um, no, in this process, I've talked to a lot of people, been part of due diligence or whatever questions that I have legally. And I also talked to a lot of other brokers, so-called brokers, and then all of them are kind of inclined to one or the other RCs, which I did not like. And then I got introduced to Matt. So I felt Matt is independent advisor who is not related, who is not inclined to any of those RCs out there. He has his own individual perspective, which I liked, and he also goes visits a lot of other sites in person. And then he does a lot of business planning analysis and then economics on the project. He actually guided me and then helped me find a project which um, he would not get any benefit out of from the project. So I appreciate that, Matt. And Yulia, you're so helpful. You're very prompt in answering questions. I have heard a lot of horror stories with other legal counsels. So Yulia is very prompt, responds very quickly on the email or phone call or a WhatsApp chat. So I think I am one of the luckiest investors to find these two people that are very prompt, very promising, and then very, very helping and guiding. So when I got introduced to this idea of webinar, then I thought, now why won't I just help them out to reach out to other folks and also help the EB-5 crowd to see what they have to offer. That's how we kickstarted this webinar. So glad you both are here. We can start, like Matt just mentioned, it's an open forum. Anybody can ask questions, post questions, raise their hand or whatever, shout out. So we'll probably start with a brief introduction as we have enough crowd here. Matt, probably we can start with you, what you do with EB-5 process, your journey, and then your experience like, and then we can jump on to Yulia.
Yeah, thank you so much, Ritesh. Happy to delve into my background. So, me personally, I've been involved in investment immigration for the last 14 years. It's a real passion of mine. I come from a family of immigrants, and it's just like their lives were changed by the trajectory of being able to get access to the U.S. market and start a business. Me personally, I'm an expert witness. I testify on Matter and I'm responsible for creating business plans and economic studies that have gotten many of the projects approved. I'm also registered with an investment bank. So we go through rigorous underwriting and we provide really deep independent analysis. When I started my investment banking practice, I wanted to specialize in helping EB-5 investors. So generally what I do is I go through about 20 to 30 projects, usually seasonally, and I try to underwrite those projects independently and empower my clients who are the investors to help them choose and help find suitable investments to them. So yeah, our philosophy is to have an open architecture, right, and not give any favoritism to a project, but empower the investor. And it's like a real estate business model where you have a buyer's agent and a seller's agent. So I am the buyer's agent of EB-5. So this is my passion. Thank you, Ritesh, for organizing this.
Thank you, Matt. Yulia, you want to jump in and then give a brief?
Hi all, thank you very much. And again, Ritesh, thank you very much for your kind words. Very happy to be here. And briefly about myself. My name is Yulia Varenenko Campos. I am the founder and managing attorney at YVC Legal. My primarily focus is EB-5 and investment visas. So this is our bread and butter, and I have experience of helping hundreds and hundreds of investors and families to immigrate into the United States. What we usually do, we help people to structure their source of funds to make sure that it's compliant, their pathway of funds into the project, and to eventually get green cards and get the case approved as soon as possible.
Awesome, thank you. Thanks, Yulia. Thanks for that introduction. So with that, without no Geo, probably we can jump on to some commonly asked questions. I have a list of questions with me here that folks have sent me over time, and then my personal questions too. If nobody else have anything, I can start with that. I'll give just half a minute to see if anybody have a question or answer, or ask something. I see something in the Q&A. We can start there. I think there is a question from an attendee. So they were asking, can you talk a bit more about rural versus HUA? Is HUA better now that rural may have a good long queue? I think this is directed to Yulia, right?
Yes. Well, of course, I mean, I will differ on the investment side to Matthew. In terms of the immigration side, it depends, because what is your priority? So different people have different preferences, different stomach for what type of risk, which is the investment side of this decision. But in terms of the immigration, it depends on how fast you may be able to get your green card. As we know that there is prioritized rural processing, so definitely we are seeing faster adjudication for those people who are applying based on rural projects. That's definitely true. But of course, it's not the priority for many. For example, those people who are already here on H-1B status, maybe they have plenty of time for an ability to keep extending their H-1B. Sometimes, if there is a good project that they really like, which is high unemployment area, there is no specific problem with them selecting that project and waiting longer, because they already here. You can already have an EAD and travel document while you're waiting. So basically, already have all the benefits of having a green card while you're just waiting. So again, it's a personal decision for everybody. There are a lot of considerations from the investment side, which I will leave for Matthew to add, right? But in terms of speed, it's all about, okay, how long am I actually prepared to wait to receive a green card? How fast do I need it? Do I have any other status? Am I already in the US, or am I applying from abroad, right? That makes a lot of difference there. And of course, other issues like children aging out, or maybe somebody's losing job, or things like that have to be also considered.
Yeah, and
Awesome.
I'll chime in from a project selection perspective. So originally EB-5 was really optimizing the capital markets for these high unemployment areas. And it just, that was like the industry standard, especially pre-RIA and even post-RIA. It was very hard to be able to come up with rural projects. So I will say there's a lot of history there and efficiencies created from that. And the thing is with HUA, it was very easy to gerrymander tracks to create almost anything that was HUA. For instance, like there was a very famous project in Beverly Hills. It's HUA. Even post-COVID, the unemployment really shot, really had a lot of issues, and it created some unique opportunities. And like there's projects in prime New York City, in like Chelsea, and like Midtown Manhattan. So, there were opportunities to build very high quality projects. Now, having said that, the benefits of rural have been immense. And I would say the EB-5 capital markets have really adopted to really good, high quality projects. And I've seen some good stuff. What I would say is you really just have to evaluate everything on an independent basis. If you have the patience to wait and you can deal with the immigration timelines, there are some gems out there for sure with HUA, but it's not to say that they aren't great rural projects. And I'll give you an example. They don't really count tourist demographics as part of the population count, right? So there are some unique pockets with rural projects that are really high destination areas that are really high quality. So you just have to really evaluate the project independently and understand those markets, right? Like a tertiary market, it's like a tier 3 market, may not be the same as a primary market, but it also really depends on the asset class, right? Hospitality is very different than multifamily. So it's very important what asset we're measuring, what market we're measuring, right? Why it's rural. What I will say is it is very important to understand the TA status because things can come in and out of status. So just make sure if something is rural and it's a really growing area, right, when that designation is up for renewal. So that's one thing to evaluate that has come up with some of my investors.
Yep. Thanks both Matt and Julia. Good insights. If you still have follow-up questions or concern or clarification, you can just raise your hand or put it and throw it in the chat again on this question. I don't see anything after that, so I'll probably jump on to my most common questions I have, Matt. I think this is directed to you as an investment advisor. So what are the common ways a project's source of funds or source and use of funds hides the problems?
Yeah, this is probably one of my favorite issues to address. So first thing is a lot of times people prop up a lot of equity, what I call phantom equity. So what is phantom equity? A lot of projects they'll buy land at a really like low cost, right? And the projects go through entitlement and value is created and they'll have multiple appraisals to say what the land is worth. and they'll use the highest appraisal and prop up equity to show a much higher equity contribution than what I call like real hard skin in the game. So number one, we really want to look out for that. Number two, there's a lot of conditions for things to happen on the capital stack, right? So they'll say something is equity, but sometimes it's recycled capital, so they have to be able to meet their benchmarks and performance and pro forma for things to happen. Sometimes people get very cute and creative on what's equity, right? They're not real equity sources. They're some kind of bonds. They're other forms of collateral that they call equity, which doesn't make things good or bad, but needs to be understood because there's no free lunch in this business, right? Anytime you get something, there is a cost for it, and that definitely affects investors. Other things, a lot of times when you see these source and use of funds, right, it's like after certain events happen, meaning, this equity will, there's a bridge loan in place to start the process, right? And it's not advanced with equity, right? And they're hoping to use EB-5 money to pay down the bridge. And I'm not discounting regional centers that necessarily do it, right? But what we do want to evaluate, bridge loans are a very precarious position for EB-5 investors because by nature, they're short term. And if you don't take out that bridge within the term, you're technically in second position and the project can default. And if that project defaults, it is not so easy at that point, right? Like as a second position investor, guess what? Right? There are penalties, there are fees, right? There's attorney fees, there's legal fees. It becomes a huge mess. So it's very important to understand the bridge, the velocity of EB-5 investment. And many of these projects that say, hey, you're a senior equity investor, that's only when all the EB-5 money is raised and all those conditions are met, unless there are really structural, good, sound mechanisms in place to protect those positions. So really the details and everything, Ritesh, is in the footnotes. So read the footnotes, understand, ask the questions. They're buried in the documents, or honestly, frankly, they're not in the documents, right? You have to be able to extrapolate it yourself with the right questioning and due diligence.
I think that's where you come in handy to help guide us or
Uh,
unhide those hidden facts.
Absolutely. One of my first kind of things I look at, right, is a clear structure of what this capital stock looks like and dependency. So one of my favorite things to do.
Awesome. Any follow-up questions on that? You can put it in the chat or Q&A. Let me check if there is. I don't see any questions in Q&A. Probably I can jump on to my next common asked question. Oh, I see one. Hold on. Somebody asked, what about a senior loan?
Yeah, happy to answer that, right? So listen, everyone says senior loan is the best loan. I'm just going to say two quick things on that, right? In a high interest rate environment, it's created that loan product. So when interest rates are low, it's very hard to come up with EB-5 senior loan products. Like the market tends to go to mezzanine. So senior definitely is a better position. It doesn't make it necessarily a better EB-5 product, right? Like if a project is overly leveraged, for instance, and you're in senior position, it could be inferior to a lot of equity, a very small mezzanine stack that's structurally sound. So very important, right? Being senior position is a marketing data point, right? Marketing helps kind of generate that interest, but senior loan as a term itself is meaningless without the full picture. So don't, look, we want protections and everything. It's important never to look at anything in isolation and understand all the dependencies.
Matthew, I have a follow-up question for you. Do you think if the interest rates will go up, we will see less senior loan deals out there?
Well, if interest rates go up, we will see more senior
Sorry, I mean,
for
if they
sure.
go down.
Yes. So when interest rates go down, so something to think about, like why does EB-5 exist, right? So a developer is only going to go through the trouble of going through this EB-5 process and deal with retail investors if they can save on the cost of capital, right? And usually there's going to be intermediaries involved, right? And the intermediaries need to make money too. So if those rates get compressed, right, they have to go through other loan products, right, which is a mezzanine, which typically commands higher rates. So in a lower interest rate environment, which is coming for sure, we're going to see way more mezzanine projects out there. And they could have a riskier profile, but not necessarily either. So, like I've seen very high quality mezz products as well. But definitely, people who like senior loan products, I would say now is really prime time for that.
Awesome. I have another question. So from an attendee, uh, he writes that does USCIS start looking at I-485 only after your I-526E is approved? And which is why rural is faster because your 5 to 6 is prioritized is a question. I think Julia, you can jump in.
Thank you. That's a great question. So it's true. Of course, the USCIS cannot approve your I-485, your adjustment of status, before the underlying basis of your I-5 of your AOS is approved, which is I-526E, right? So until we have an approval of the EB-5 petition, your AOS will remain pending. And yes, that's the reason why we're seeing faster adjudication on the rural side. But with a side note, right, we're seeing faster approval of I-526E petitions, but we still have to get an approval for I-485, which is an adjustment of status. And typically, what I've seen in the past, we would get very fast approval, like in 4 or 5 months for I-526E, but adjustment of status would still be pending because it would be still in the queue. Of course, they can already approve it because the visa bulletin is current, right? And the underlying basis is approved, but it's still going to take a few more months to actually get the green card. But having said that, having an approved I-526E is very important, right? Assuming there are no immigration violations, no any issues which can make person inadmissible, once you have approved an underlying basis of your case, getting a green card becomes basically just a matter of time.
Thanks, Julia. I know there are a couple folks here that I personally know are just starting the process. So just for their understanding, the 526E is the source of funds petition, right?
Correct. So I-526E is actually the EB-5 petition, which includes information about your investment, source of funds, and the project.
Okay. And then so what I understood is your 526E depends on your F approval, and then your 485 depends on your 526E approval.
Correct.
So not having an
So
F
we
will
have project approval, then your EB-5 petition, and then we have the green card.
Okay. If there are any follow-up questions, you can just post it back on that. We have another question jumping on next. What weight do you give on the RC/NC loan rate to developer? If interest rate is lower, does that mean it's a more competitive or potentially better EB-5 project?
Yeah,
I think
that's
Matt,
a very, very high quality question. Bravo for that. So this is what I'll say, right? The cost of EB-5 capital generally should be at least 1-2% lower than the market of the commercial market rate, right? At least minimum. So a very competitive product can take a bigger piece of that spread. So it is a good indicator if the EB-5 cost of capital is lower. That means many of these regional centers are bidding for that project, right? Which shows that, hey, there could be a lot of interest in it. Now, it's very important, never look at anything in isolation, and it's very important to understand those benchmarks, right? So a typical, I would say, construction loan, right, in a rural area could be 10, sometimes more, right? And it really depends on the track record of any of the developer. Like in a very established like community with a really good, really good developer, they can get lower rates, 7, 8, 9%. So it is very nice to see what would be the market rate, right, if people didn't want to go through EB-5, and how much value is being extracted, right, from the EB-5 fundraiser, like, what many people would call the regional center. So what I like to see, I don't want the regional center charging more than like 8 or 9%, right? I've seen projects charge 4, 5, 6%. I mean, that's great. Just they just have to be reasonable, right? And you have to understand how to calculate all the fees. There's management fees, there's a cost of drawing down fees. There's all these other additional fees. So even though one thinks something is a low cost to the developer, you look through the PPM, many of these projects have like aggregated costs, through all these different sources. So you have to see what the real true blended amount is and how much value is extracted up front versus how much value happens based on performance as well. So I would say it is a positive indicator when rates are lower to the developer. That means a project has a lower cost of capital and thereby more likely to be profitable. But again, there is no one item determines everything. Right? You have to look at the whole picture.
Thanks, Matt. A follow-up question on that, Matt, is I looked at a project which is vertically integrated, meaning the RC and the JC are the same, NC and JC are the same. So they have 12% cost to the developer. They're loaning the money, the EB-5 money to at 12% to themselves. How do you look at that? Why would they do 12% to themselves?
Yeah, it could be phantom cost. It could be many reasons. Maybe there's different affiliates involved that want to participate. What I will say, what I get more commonly with vertically integrated operations, there are pros and cons to that whole model. So number one, you should expect more transparency when that happens because there is a lot of conflicts, right? The main conflict, and Ritesh, I know we talked about it a lot, is will one entity be willing to foreclose on itself, aka the other entity, if the asset doesn't perform, right? So first thing is, you really need to have extra transparency, right? And be able to disclose who the affiliates are, and being able to uncover the reason why that would happen in that particular project, right? Maybe it could be a tax, it could be maybe a tax benefit to be able to write that off, right? So they can play between the two entities. There could be affiliates involved. I will say 12% is definitely on the higher range. So there needs to be like real due diligence to understand why those rates exist. But I will say nothing is set in stone. I have seen good vertically integrated like projects as well, but it's important. How do they mitigate those conflicts? So there could be a really strong material personal guarantee, not a commercial like corporate guarantee for some shell entity, right? To be able to mitigate this, like, hey, even though it's hard to believe I'll foreclose on myself, I am personally putting my name like liable for this. I do tend to favor operations that kind of separate things, right? I really like institutional middlemen and fundraisers that handle that. But it's really important, you got to look at everything holistically, right? Every project has its own features and benefits, and there's pros and cons to everything. So it's really important to look through all of that.
Sure. So that project that I looked at is they have 12% and 2% is the ROI for the investors. So 10% is still higher, is what I felt.
Yeah, it could be. And, we can analyze things to death, but I get
Okay.
it. Yeah.
Thank you. I have another question on the chat. Assuming you have AP through EB-5, approved H-1B renewal, but no visa stamp, you travel outside the US and you want to come back. What are the implications of entering the US on AP, but not on the visa stamp?
Well, it's a great question. I get it very often. In this type of circumstances, I would first recommend see if you can get a visa stamp, because if you have AP and you have valid H-1B, you can still go and apply for a H-1B visa stamp at the consulate and return on your H-1B visa. This is preferential because you would be able to maintain your H-1B visa status upon return. As soon as you enter the US using your AP, advance parole, or travel document, you become a parolee. So basically, at that point, you're no longer in H-1B status. What is the risk? The risk, you can absolutely do this. People do this very often. Many visa statuses like F1, E2 visas, they don't allow you to maintain underlying non-immigrant visa status. H-1B is just special because it has this dual intent possibility. But if you enter turn on a travel document, you will be a parolee. And if the case is denied, you would have to leave the US immediately. So it's a risk, right? Unless you're sure that your source of funds is good, that the case is not going to have any denial, any request for evidence, yes, sure, AP is okay. But otherwise, my first recommendation, let's see if you can get an appointment to get your visa stamp. And so you can, and you will be able to travel, right? And that AP will be your insurance. That will be just a document you keep in your back pocket in case you, God forbid, get laid off while traveling or visa is revoked or whatever else can happen in these crazy times.
Thank you.
Thank you. And Ritesh, we have like a project, a question that is specific to a project. So I'll just reframe the next question. So
Sure.
it's universal. I don't want to give any individual financial advice. So I can't really do that in this as a financial advisor for forum. But we have an investor. They've asked, what do they think about a big entity like X as a developer? Does that help? So the way I'll frame this question is if there is a large developer for a project, right, like a big established builder, right, in one of these particular regional centers, is that a favorable consideration? Okay. This is the way I'll answer that question. Okay. So anytime there's a big development in a rural area, right, we want to extra scrutinize if that community can absorb that much business, right? I do tend to get uneasy with very large projects in rural areas. It's not, listen, there is no universal magic wand, right? But just imagine big vision in a very small market, right? So you can do things in Manhattan with these big figures and uh, you can definitely absorb that type of business in these maybe vacation markets, secondary, tertiary markets. That becomes, that really becomes an issue, right? So models where let's just say homes are sold, I will say like assumptions are used. An assumption is an absorption rate. An absorption rate means how many units can be sold in a month or in a term, right? So, there are benchmarks for this stuff. Like, hey, X markets have 1 to 2, Y markets have 2 to 3. I will say many of the projects have very aggressive benchmarks, and you need to be able to re-examine it and be able to underwrite it. If lower benchmarks happen, can this thing get sold out? A lot of times, a lot of these big builders, they'll also say they have these big balance sheets for marketing purposes. You don't know what type of exposure those balance sheets have to other projects, right? And big is nice, but you have to understand how it relates to your project. So have they created a new entity, right, to be able to guarantee certain things? And if they do, have they lent, like, is there any sort of assets into that? Or is there any transparency in that? Some of them give good transparency, but again, we don't know what exposure it has across markets. So what I will say, big is nice, doesn't necessarily mean bigger, right? Big in a rural market needs extra scrutiny, right? And reputation is important, but like I'll give you an instance. I'm in Century City, California, like CMB, huge huge regional center. They were sponsoring a major developer, right? CMB, I would say, has a fairly good reputation, but even though good reputation in regional center, good reputation of builder, things can still go wrong, right? So good, they're perfect poster child cases of having big failures, and there's plenty of small projects that perform well. So don't ever just use marketing data to just say like to uncover to be able to ease any concerns you have. Everything needs to be scrutinized, for that asset.
Thank you. And we have a few follow-up questions on the RC and CE, the vertically integrated project, so we can combine all of them. So one question probably, Yulia, for you is about the side letters. An investor says that the PPM states that they have limited rights on voting, but they gave a side letter saying they have rights for voting. And he asks if the side letters take any precedence over PPM.
Yeah, that's a great question. Honestly, I don't want to say I'm qualified to answer that question. That's at the end of the day, like, does that carry legal standing? One thing I will say, I
Favorite
would,
answer depends.
yeah, one thing I will say is I'm hoping after this September 30th, if they come up with any reauthorization, they give some clarity on how side letters are work. I am hearing that they want to be able to stop side letters. I personally don't think it's fair to give some investors other rights over others. Everyone should be able to have the same rights, same standards. Um, I I think it's nice to have a side letter than not. Do I know if it carries legal weight over it? Uh, I think so. That is my opinion, right? And I know people like have realized real benefits from side letters. So I don't want to say anything outside of my domain. That's definitely a securities legal question. So that's all I could really touch on that. I could really say on that.
Yulia, do you have
I
any
can add
thoughts?
to that. I can add to that a little bit. So, of course, it depends. I think this is the best you can get practically from practical standpoint of view. You will never see a regional center changing their subscription documents for one investor to change. So this is basically the only mechanism they have to give a preferential some other terms to a particular investor. So definitely, if you're getting any different terms, it's better to have side letters and nothing. Like you don't want to have it just you don't want to have a verbal agreement. You want to have it in writing. Having said that, what is enforceability? Depends on how the documents are structured. And I think, of course, you would have some kind of grounding to if something goes bad, right? And at any point, you would need to try to enforce it. There could be ways to do that, but not always, right? And again, this is very general question. So typically, like I would need to go over documents and the PPM to answer that better. But what I've seen in the past, also practically, if everything is going well, most of the regional center, at least the most of the regional centers that my clients have invested, they do adhere to the terms of the side letter in good faith. And I think Matt can also agree to that if they're giving you a side letter, they have all intention to actually adhere to those terms that they're doing. This is mostly a question of if the project is going south and they cannot give you those letter terms.
Yeah, perfect.
Yeah, there is one more question. I'm going fast just for the sake of the time. So there is one more question regarding the vertically integrated project. So Money asks, what are the risks for vertically integrated structures? Are CNC, JCE all are the same compared to non-vertical structures? Is it safe to go with such projects?
Yeah, great question. I'll share a few thoughts, and I'll actually compound it with another question that I have. Like, I think it just begs this question, right? What are the roles and responsibilities of the RC versus NCE? I think that really captures the essence of that question and the fundamentals. Okay, so let's just talk about everyone's roles, and I think it'll be clear. So first of all, a regional center, that term is the most misused term in the industry, right? A regional center is an entity, right, that has the authority to do an EB-5 project in a geographic territory, right? And then that regional center will apply and sponsor a project, and that project, individual project, can get approved or not, right? Depending on how they submit the documents and how USCIS looks at it. Okay. The NCE really is the enterprise EB-5 investors are going to be interfacing with, right? That is generally the bank in many cases, right? So that's like your institutional, like front facing group. When you hear many of these brands you're doing business with, you're generally not doing business with the regional center. You're doing business with that NCE group, right? They're supposed to be organizing the fund. There's something termed as an NCE manager. That's the entity that orchestrates the whole EB-5 offering. Now, most NCE managers own their regional center. That is a better structure, right? It is a superior structure. However, one can rent a center, right? And one can have different affiliate models with that regional center. So one thing to know is if that regional center is renting to many groups, you should just make sure, like, if there's any fraud or misrepresentation from the JCE, the project, that could affect your own offering into a project. So if there's a rental, that's okay. Just make sure that rental isn't sponsoring any projects that are, that may be unscrupulous. Now, I want you to imagine, right, the NCE, the JCE, the project, right, the regional center are all the same. So your bank is loaning money to itself, the developer, and you are an LP investing into that bank, right? I think the conflicts are clear in that regard. Now, that bank can come and step up and say, look, I know there's this conflict. We're pledging XYZ. This is the securities that we're going to be able to provide. The benefits are X, Y, or Z. We're going to pass through savings. We're going to give you extra perks. And you can decide if you want to take that risk, right? So there's no question those conflicts are inherent, right? It's a bank loaning money to itself. Are you willing to foreclose on yourself, right? Like, what's to stop people from extending a loan, right? Very hard, very expensive to sue. There's very practical considerations, okay? So, you should just expect different perks in that model, right? But listen, one positive thing I'll say is when a project is vertically integrated, they do realize more profits, right? And that could, in theory, be more sound project. Okay, not necessarily everything needs to be examined as a whole, but that's what I'll say in regards to that structure.
Okay. Jumping on to the next question, somebody has Karan. He asks, are there rural projects that provide equity? Is it less riskier if a project that provides equity or a senior loan?
Look, I can't say anything specifically. I know there are projects that give equity models. I'll just say, as in general about equity, they are liquidity issues sometimes, right? So generally, like, there needs to be a sale in a waterfall event, right? There are a lot of assets that are out there that are not easily liquidable, right? It's more of like a cash business model. And yes, there are markets for that stuff. So when you own equity, there are very small fractional ownerships of it, so it's not as easy sometimes to be able to get out. Um, but they exist. They're not as common. Can't tell you if it's better or worse than a senior model, right? Like, it's just generally, I'll say specifically my investors don't like it. And I will say my investors, they want to optimize for capital preservation. So could there be capital preservation equity project out there? Possibly. More likely than not, right? The loan models tend to be more optimized for that capital preservation outcome. So just definitely examine that with more scrutiny and understand their business model if you're going to do an equity investment model.
Awesome. I think next question is also for you, Matt, and this is about the line of business. So somebody asks, what are your thoughts on senior living housing in the vacation market area?
Yeah. So I will say like a couple of things on I can touch on senior. So first thing I will say is just know senior or any very specific use case, they're going to be defined as like a single purpose like operation. So from a commercial standpoint in underwriting, anytime you have a very specific use case versus something that can be repurposed, like housing is very flexible, is a very broad use case, or let's just say a truck stop. Like you can't build anything else. If you want to build a truck stop, only a truck stop can go in there, right? So if you're going to these specialty purpose projects, just know that most lenders out there, if you were a senior lender, are going to want 30 to 35% equity as a range. So only invest in a project, I would say, is if it would do well, right, in a normal commercial market, right? So my ideal use case for my investors is, can we use EB-5 capital to lower the cost? Would this project be funded in a commercial setting? Yes or no? Now, I don't think there's anything wrong with senior as an asset class. We have an aging demographic, right? Those could be good in a rural community. But anytime something is rural, let's really make sure we understand those absorption rates, right? And make sure that community can absorb it and make sure it has the right capital structure. Right? As a rule of thumb, pro formas you're seeing on these marketing documents, they're all inflated. So stress test everything, right? And listen, it's okay. Like, don't worry if the pro forma is overly exaggerated, but the most important thing is there are a lot of margin for error because you're not generally an owner of these projects, right? You just want to get your money back. So is there enough margin to absorb, a change in the pro forma? And if something is a specialty purpose product out there, can that be financed in the commercial environment, right? And the reason why that matters to you, that's your backstop, right? Always things to think about. Interest rates, let's just say, go up, right? They're going to need more equity to be able to have that backstop options and other items. So it's really important, right? You examine a project holistically.
That's good. And then, Matt, can you also elaborate or briefly touch on the roles and responsibilities of an NCE versus JC, RC versus NCE? I'm sorry.
Yeah, I think we touched on that a little bit, but I'll just reiterate.
Just briefly, yeah.
Yeah, so the NCE is generally the entity you're doing business with. That's like the institution, that's like a bank, right? The NCE has a very vital role. They manage the whole EB-5 fundraise. They're responsible for really being the fiduciary, right, for the EB-5 investors. Now, look, they're not
Can I
always.
add to that?
Yeah, go ahead, Yulia. Is that
Or I
okay?
always say NC is the company you are owning when you are investing into the project because you're becoming a limited partner or a limited member of the NC. So this is your company.
Great. Yeah, exactly right, right? So the regional center, like I said, Ritesh, is just the right to do an EB-5 project in a territory, and the JCE is the project. That's where your money is actually being used for. So, think about it, right? Like, does a bank usually own the project and fund its own project? Generally not. They exist, right? So usually a bank is a third party, a project is a third party. You are an investor into that. You're basically the capital that the bank uses, right, to fund the project.
Sure. On the same lines, we have another question. Naveen asks, might be a good idea to talk about the role of third-party administrators like proxy services and how much oversight they truly have. Does it prevent fraud by JCE/NCE depending on spending the money elsewhere, etc.?
I'm happy
Yeah.
to answer that.
Go ahead, Julia.
Go ahead, Julia.
So something is where I really like this addition of the independent fund administration to the after the reform. I think it's a very good additional layer of risk mitigation. But what we all need to remember, they're not regulators. Okay, so this is additional. This is a company that is doing based on whatever the agreement they have with the regional center. They would be reviewing the projects, the use of funds, but they're not regulators again. So of course, a lot of things depend how, like which company is a fund administrator, right? And what is exactly, it's a very good due diligence signal in a way, because it shows that there is a third party that is kind of looking at the funds used in the project. But if we're talking about, can this 100% guarantee that they're compliant? No, the answer is no. It doesn't 100% guarantee that the regional center and the project is compliant with the EB-5. And I'm sure Matt can add on the investment side what his thoughts are.
Yeah, I mean, I think you nailed it, Julia, right? So I'll just tell you a few things on it, right? Not all fund administrators are the same. So all the vendors, should have its own due diligence. Some offer more services as well. Projects are only obligated to do an annual audit, but that's the minimum. So there's also a project transparency, investor relations consideration, right? Like how often are there going to be communications and formal updates? What I will say is in the fund administrator side, it's not necessarily good or bad, but some of the fund administrators is more of a technology, very good technology, and some are more like service oriented. Some can have their own CPAs. So it's really like how the service is utilized and how willing the developer and the NCE are willing to offer more transparency than the minimum standard. Um, Having a fund administrator was a huge, awesome, basically win for investors. It's helped a lot of projects, but it definitely it's not an end all be all thing, and definitely things can still go wrong with that. I wouldn't say it can 100% eliminate fraud, but it's a fantastic step forward.
Awesome. Matt, we have a follow-up question again on the side letters issued by the vertically integrated projects. So that follow-up is, so they are issuing side letters for voting rights in case the project is at fault for foreclosures. So I think the question mainly is, would these side letters be entertained to foreclose on themselves if we have to vote for a foreclosure?
I can't give legal advice on that. What I'll just say is like a general practical thing, like whenever it comes to anything legal, right? So one could have a legal right, but legal right doesn't always win the battle. So, I wouldn't ever just count on that, right? What you want to do is make sure the project fundamentals is very important first. I would advise someone to consult a proper corporate securities attorney to see if that carries any weight. I've seen this come up a lot, and like you want to be able. It's nice. I understand the EB-5 is perfected. You want to have voting rights, right? I think it comes up most with reinvestment, if anything, right? Generally, the NCE has the sole authority to reinvest, right? And and basically the investors are silent in that. So, that I think is a very important consideration. Do I know if it carries weight or not? I'm sorry, I don't, right? Like I negotiate it for my investors, but a lot of projects won't do it. It's understandable. Like it's very hard to create side letters for some investors to clarify things or not. I don't want to go out of my domain and talk about things that aren't my authority. So that's really all I could say on that.
Yeah, I think it boils down to the question, like for the vertical integrated projects, do they themselves foreclose on themselves? Right.
Yeah, I mean, I'll let that be self-explanatory.
That's what it
I can
is.
actually add to that regarding the side letters. So if they're issuing side letters to all the investors, then why you're not amending the PPM if it's going to apply to all the investors? And then the question becomes, is there a material change, right? Are they required to file I-956 amendment? So of course, it's also securities compliance risk. I'm not a securities attorney, but definitely I can feel like there could be some issues there.
Okay, that's a good point. Yeah. And jumping on next is this is likely an attorney question. Does the regional center have a bad project impact on other projects that they are renting to or sponsoring to?
Good question. I get this very often. And what I can say that eventually, if you're talking about the regional center that has been for a long time, eventually one of them will have one or two projects that didn't work out that well. It doesn't necessarily mean that there will be legal compliance issue for the regional center. The question is why the project didn't work out and how they handled it. Okay, so for example, if the project didn't work out because of the market downturn, that's one thing. But if something went wrong because they misplaced the money, they committed any fraud, misrepresentation to the government, that of course can affect the regional center itself. It can get, it can lose its designation with U.S. Citizenship and Immigration Services. And of course, it can affect overall all the investors. But also, whenever you're looking into a regional center and you know that there was some project that didn't work out, I think a good question also to ask them is, how did they handle it? Like, because I've seen situations where a project didn't work out, but the investors were still able to get their conditions removed, right? So did that occur? And of course, did they return the money to the investor? How did they handle the problem? How did they restructure the project? What did they do to take care of their own investors to make sure that those investors receive their green card, which is, of course, the primary purpose of all this. And second, they receive their money back. So it's not necessarily a red flag, right? So we say that if they had a bad project, why? What happened? What went wrong? How did you handle this? That's the questions to ask. And sometimes I've seen regional centers with projects that didn't work out where investors eventually received their green card and somehow they were able to get something back to them. So this also kind of indicates that the regional center, in good faith, tried everything they can to take care of their own investors. So see it as a tool to understand how well they will take care of you if things go south, which is possible. But any issues like fraud, misrepresentation, any related to anything that you think there was any possibilities that they lied at any point to USA as they failed to comply with the regulations, that's a different story.
Good thought. Matt, this is, I have a question, but this is too specific for a project. So Naveen asks, are there any projects out there with capital return repayment in 3 years or less?
Yeah, I can answer that in a pretty fundamental way. So I want you to think about what it takes to do a construction project, right? So yes, you can find projects that construction has started, but generally to do an EB-5 project, in order for it to make sense commercially, the raise and project needs to be substantial enough, right? So we're not talking about building single family homes, but even if you were building a single family home, right? You have to still like do demolition, right? You have to get permits. The asset needs to go up vertically, right? It needs to be stabilized. We need to find the buyer for it, and it needs to sell. So, is that realistic to do in 3 years or less? Generally not. So, especially like any sort of project that needs to be refinanced, you need 1, 2 years to stabilize the product just there, plus to be able to build, right? And then there's delays. So I think if you set yourself up, if you try to find projects for 3 years or less, you may be setting yourself up for failure. So, that generally is a tough issue to be able to find. Now, have they existed? Yes, I think I've seen projects that have promised that. I've never uh, felt comfortable with too short of a timeline. I will say sometimes investors will come and replace other investors for source of funds issues, and you can find some issues where the loan term has started. Anytime you engage in that type of environment, very important to get a professional to help you examine, is this going to meet your sustainment period and other conditions? Because not like perfectly simple, but a timeline horizon, like 5 to 7 years is a realistic timeline horizon. I would say 5 is even considered on the aggressive side. It can definitely be done, but you want to be able to give enough grace to the investors. I'm sorry, to the developers, right? So it's very hard to do a construction project. They need to, sometimes they need timelines to avoid delays. I think it should be expected delays will happen. It should be expected that it's going to take more time to stabilize or sell things. There's so many variables involved in these projects. So I think delays are part of the business plan, right? Those contingencies are there for a reason. Also, as just a kind of another issue, like usually there's no incentive for the developer to pay back the loan sooner than it needs to be, right? So EB-5 is a cheap cost of capital for these developers. So whenever they are extensions, more likely than not, they're going to be used. So just keep your expectation that that full term is going to be used up. And if in a liquidity event happens sooner than that, that becomes a gift. That's the way I really like to look at things.
Awesome.
Also, with the short project terms, something that you need to keep in mind, what I often see when people, when the project term is shorter, people are going maybe towards the end of the project, which is risky from immigration standpoint, because are your money going to be used on job creating activities? That's very important thing to look out for.
That's a good point. Matt, next question is for you. It's about the economics of the business itself. So you touched on different asset classes, and is there one asset class better than the other, and then how does it affect cap rate calculation?
Yeah. So we'll take this as the final questions. I know we're going over time. One thing I will say is if anyone wants to talk about anything personal, Yuli and I are available. I'd be happy to take a consult, go over any individual cases. What we can do is we can email everyone over a QR code or, just feel free to reach out to us. We're very easygoing and, we really want to support the EB-5 community. I know it's a really scary time for everyone and everyone's betting. A lot of people in this group here are probably in a position where they're investing a significant part of their net worth into a project. We are here to help. So please reach out. We'd be very happy to do a one-on-one consultation. To answer the question about asset class, cap rates, etc., you can't just say one thing is better than another. What I will say is these are the factors to consider. Okay. They're primary markets, they're secondary markets, right? And there's something called even tertiary markets. Okay. So the market really matters. You have to be able to compare apples to apples, right? An asset class needs to be looked at in the market, and those asset class have benchmarks, right? So a cap rate for multifamily affordable housing is very different than hospitality. So a common mistake I do is they're measuring cap rate on a hotel versus multifamily. No, the the hospitality need to be underwritten at a more, I'd say, less favorable cap rate because it needs to be stabilized, right? There's generally more demand for multifamily. But that's not to say that's better or worse than the other project, right? The market matters, the plan matters, the capital structure matters, the developer matters, right? So what I will say is we do try to standardize projects for comparison so we can review things, right? But if you're comparing two different asset classes in two different markets, it's appropriate you need to adjust the assumptions, right? So they're more, you can try to compare the investment structure to them, right? So that's something we like to do, and it's very important. So feel free to reach out to us if you have any specific questions. Ritesh, I just want to say thank you so much for generously being able to donate and volunteer your time. Ritesh, I know you've been so incredible to the EB-5 community and to your peers, like very selflessly putting everyone together. I really want to thank you. You've done such a service to your community. Yulia, it's always wonderful to be on a panel with you. You're just so knowledgeable in what you do. And, we really care about our investors. So anyone needs any help, please feel free to reach out to Yulia and myself. We're genuinely here to help.
Yeah, thanks, Matt. I
Thank you,
did put
Matt. Thank you,
both of your
Ritesh.
emails on the chat. You can also send those emails, I think, Matt.
Yes, any
Matt.
remaining questions, everybody, all the attendees, please send to me. I'll be happy to respond.
Thank you.
All right. Have a wonderful day, everybody.
Yep, thanks, Matt.
Thank you.